Domestic markets slipped on Monday after the US Federal Reserve firmed up its ante against inflation and dismissed talks about any softening in its monetary policy. The US Fed's chairperson, Jerome Powell, reiterated that the central bank will continue with the rate hike cycle to tame inflation. This, he added, will also bring some pain to the US economy. As global markets plunged, the Sensex and Nifty indices declined the most in around a month. The sell-off was led by Nifty IT Index, which shed 3.5%. Besides, the tough talk on rate hikes and likely economic slowdown has also renewed recession fears for the Western economies. Meanwhile, RAL also ended nearly 1% lower at 2,597 rupees despite the AGM announcements on 5G rollout and the new gigafactory for power electronics on Monday, and added to the overall weakness. That said, experts say that rising rates in the West actually be favorable for India. According to G. Chokalingam of Economics Research, for a few more weeks, the Indian market may remain volatile with a downward bias, but eventually it would benefit from anticipated interest rate hikes in the West, which would bring down their aggregate demand and consequently oil prices. On the other hand, with rate hikes expected to be the order of the day, the strength in the dollar weakens the case for foreign inflows, analysts say. The rupee on Monday slumped to an all-time low of 80.14 per dollar. The dollar index soared to a new 20-year high of 109.4 during intraday deals on Monday. VK Vijaykumar of Geojit Financial Services said, the sharp rise in the dollar index and the 10-year bond yield is negative for capital flows to emerging markets like India. FPIs are unlikely to continue buying in India in this scenario. Investors should not rush in to buy the dips now and should wait for the dust to settle. Technical charts, however, suggest the outlook for frontline indices remains positive over the medium term.
Indian benchmark indices saw one of the biggest decline on Monday following the weekend speech of Jeremy Powell, the chairperson of Fed, indicating there is a likelihood of further interest rate hike. At present, benchmark indices are trading well above 200 days moving average. For Sensex, 200-day comes at 56,889, and for Nifty 200 DMA comes at 16,975. Immediate resistance, looking at the current weakness, the resistance comes to 58,700 for Sensex, and for Nifty it comes at 17,500. The medium-term outlook for Indian benchmark indices continues to stay positive, and current weaknesses could be an advantage to accumulate respective indices for a long-term bull run.
On Tuesday, global cues will likely dictate the market's direction back home. Rupee level and Brent crude prices will also be tracked by market participants.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.